Thank you, Boulder. Hi, everyone. Good morning. I'm not going to stream for too long. I'm just going to kind of go over what we were looking for here, and that's pretty much it. So we're hitting midweek, so it is pretty important that we have some sort of structural sustainment and support. Overnight, we ended up holding right off of that 769698 area. So they did a really, really good job, you guys, of holding neutral ranges, even though they did interfere slightly with bear neutral. Okay, so around 9801, but these were the ranges that we talked about yesterday anyway. So 7702 to 6699, like these areas had a lot of odds. Let me just pull it up here from yesterday. So there were the exact calculated ranges that we looked at, and I had said that the median is 7751 to 7759, and the idea is if they can hold off 7688 to 7703, we could have pretty good odds of getting back up to 7751 to 59. They ended up stalling 58 this morning and then brought it back down, and I did say that we had to hold 7720 to 22 to try getting a retest of 7750s, which I think we did a really good job at. So we had very strong zone support yesterday. I'm gonna just share the center screen. I want to go over this. We had very strong zone support around this 7688 to 7705 area. More specifically though, like closer to, where was it? Here, okay? Like around 7701, 7698. Okay, like these ranges in here, and these are right off of opening ranges, so that's pretty important. This is what avoided us from getting a steeper retracement to 71668, so on and so forth. These ones weren't core ratios. I just kind of wanted to see what they would equate to, whereas if they had a line, this could take us back to basically yesterday. Holding off these ranges in here is what could give us an odd of getting back to 7781, 7778, so on and so forth. And for the week, it puts us back at 78.29, 33, 36, basically back to net even around these ranges in here, or like back to flat, because we opened the week at 78.09, I think, and closed at 78.03, and or back to highs. So it's pretty cool that these are aligned back to weekly open and close, and then back to highs. So I did find that particularly interesting. We also had a lot of support between 77.15 and 3.8 yesterday, which ended up playing out to be basically exact ranges of like where we were stuck. So I'm gonna recap this tomorrow, but these areas here, so when I put them in my calculator, it was 7735 and 15. We pretty much got stuck exactly there yesterday, if you guys remember. So it was a neutral to neutral type of move. Today's ranges were 7722 and then a 7758 break, which I would say has been pretty spot on. So like yesterday, if we go back, our ranges were very, very close. Okay, so this is real-time session yesterday. You can see the 7738 wall, 7715 support. Like I would say that this was, for real time, this was super straightforward. Do you guys agree? Like between 7738 and 7715. So yesterday's ranges, 7715, 7738, that I would say spot on. Today is more 7722 to 7758 with odds to expand. So why do we have odds to expand today? So yesterday I figured we'd stay sticky. That was what I had determined, like right off the open yesterday, that they're probably gonna keep this a sticky price action kind of day. So this was yesterday morning. I figured they're probably just gonna keep it stuck. Why is today different though? What makes today a little bit better for odds, and specifically based on where they ended up holding? I'm not talking as loud as I normally do. Let me see if I can up it at all. Oh, it's on its max volume in here, but I'm not talking very loud. Let me unplug it. Let me see. Maybe it's time for a new headset or something. What about now? What about now, actually? Because I didn't realize I had this all the way down on my actual headset. I didn't think that made a difference, though. Is that better? Okay, that's good. Okay, so we can all come to an agreement though that yesterday's range was perfect, okay, between 15 and 38. Basically, it left the room for downside, like beneath 77, 15, 14, and then it left that room for upside. Let's just say like roughly like 17 points, okay? Between 17 to 22 points on each end, okay? So like around here off 15. Does everyone agree with that? So like off 77.15 versus 77.38. I would say that we could just say 17 to 22 points on each end, okay? So it kind of just left like that wall in between there, which I think is great. If we use exact ranges, so off let's say 3.8 and our 5.8 wall, it's roughly 20 points from where they actually broke down. Okay, because they breached beneath by like 2 points. It was like, so they had higher odds. Like upside had a higher probability because of the differential in range that broke. Okay, so I would say that on a 22 point basis, which we just took out, this is what starts to really increase our odds of getting the bigger structural break. So they're really stalling like right around that 22 point interval here, okay? For real time today, okay, like off of this morning, I just want to show you guys something. Do you see how they're also holding roughly the exact same range? Okay, do you guys see this? So it's like roughly 22.5 points. I know it's kind of hard to see, but what did we discuss yesterday? And this was something that really, really stood out. What ratios did we discuss yesterday for that whole 4-month theory that I was telling you guys about? How we have 4.5 months left on the year, divided by X amount of points, netted us exactly 44.5 points. Okay, we talked about this yesterday. Do you see how this is like that? Here, I'll just copy paste. Luckily, I type everything as I speak, so I already had it typed. But we have like roughly 194 to 200 points. So if they start recycling range, they'll take it back down. So do you see how they're kind of working like right in between? So we know that the area of risk now is for sure 6698. And in order to avoid retesting that, we'd have to hold 77.20 to 22. Upside, we have to take out 3.8 to test, 5.8, 5.9. So the differential in between is 44 points, okay? Like between this range and risk and this range and risk. I didn't measure in here, but I would imagine this is probably close to like 17 to 22 points. Okay, so from overall range, we're hitting close to our 66 point mark. Do you see that? market starts breaking once we start accelerating over like 66, 68 points, correct? Because then that's where we can start getting, what would be our next ratio? 86 to 88, correct? And this is off overnight lows, off real-time lows today. Look at where we're stalling. You have to admit that that's insane. Exactly that 44.25, 44.5 that we talked about yesterday. So we're hitting 44 points off real-time lows to real-time highs. And the in-between risk is like 22 points on each side, okay? Market's gonna start to extend once we fully clear, obviously, this means area here, and I would say push at least to like the 86, 88 point ratio, which if we pushed 88 points from these lows, where does that take us to? Right back close to the zone. Do you see what I'm saying? Okay, it takes you right back to 7786, 7788. Off of the more calculated ranges, like closer to 7715, it would be closer to getting back to 7703. Do you see how that kind of nets you flat on the week? Okay. Does this make sense to you guys? I'm trying to give you guys like the ratios for the week. Okay, so we're already hitting Wednesday, so there's only 2 days left now, right? Like once we, well, 2.5 days. But that's why these ranges become so important. Hence holding off core like 77.20 to 22, which normally these areas we net 77, 75, 55, whatever, but I'm just trying to show you guys from like the overall weekly ratios based on where we opened. Do you see how that would net you back to weekly open? I need you guys to try understanding this, okay? So 88 point ratio off a 77.20. That's the reason why I said 77.21 to 22 this morning. Just FYI, okay? To weekly OR by end of week. Does that make sense? In order to do that, you obviously have to start sustaining that by midweek, right? Does that make sense how that's kind of like the intermediate point? So I know that that's not a core ratio. It's just an overall ratio based on where we open the week, where we held. And this is more of like a neutral to neutral type of week. We open neutral, we held bear neutral, okay? Whereas if we had held closer to 77.15 and avoided this extra breakdown yesterday, we probably already would have gotten back to last week's close, okay? Or at the very least, on a 66 point break, gotten back to maybe the 77.81 retest, which is where we stalled, okay? Back in here. Like this is kind of where we have like a huge overhead now, around 77.81 to 86. Some of the things I mentioned earlier this afternoon, or morning, sorry, were the odds for today are going to be based on how early they stall and where they stall. So let me go back here. Who is tuned in that's not in Discord? Is there anyone here that's watching that's not in Discord? Okay, so, I mean, we could just quickly recap it, but I just want to, now that you can see, okay, these are the odds, okay? I initially didn't cover anything off 5-1 because I was waiting to see what they do between 5-8 and 6-4. The goal is to obviously try holding core 7722, try clearing off 5-8 to get to those 70s, like ideally 6-9, 7-1, 7-8, 8-1 retest. A lot of this is going to be to how constructive we clear this area here and how early, okay? So And before mid-session, obviously increases odds of zone entry. Okay, during or after keeps expectations right to core, so like makes 6-9 and 7-1 more of an overhead. Okay, this is especially if it's this. Okay, digestive or recycling of range only occurs if means doesn't clear. Okay, so basically if we, let me go back. Where is it? Okay. So let's figure out what happened here, okay? They held core. They stalled 5859 right at like pre-market. Okay, they brought it back down. They opened the session today in the channel, which usually can lean towards what? What kind of odds can that lean towards? Unfortunately. Okay, this is partially why I was like, if they clear early, that's good. Not choppy, but it could lead to like going sideways, okay? Because you still have to factor in where we triggered and where we held. So these actually helped us prior to open, but that type of open is what can make things a little bit trickier. We ended up closing the session at 77.13, so it was kind of a neutral, so neutral open, neutral close, and then a channel open. Okay, so that's what could start leading to that. So when I went back and looked at this, I said, okay, so ideally, like the highest probability of getting here was if you clear this area here before mid-session. Okay, so mid-session hasn't even occurred yet. Mid-session is around 12:30, 12:45. This period here, basically. Okay. To the 1 p.m., 104, 108, 115, 130 period. Okay, so this is our mid-session period. I can already determine that there's a few things, okay? One, this was a good core hold. Okay, this is where I went long off of this candle here. Okay, they initially took out 3.8. That was constructive. They came back, held, consolidated a little bit. So I said that we had some odds earlier to take out and retest 5.8. At what time? And I'm not bragging, but I'm usually not wrong when it comes to these things, especially timing things, okay? So I had a window just after 11, okay? My exact time range was around, I think it was 11:02 or 11:03. It was somewhere in between here. I had to leave for a second, so I had a window just after 11. What time did we retest and clear? 5.8, 5.9. Okay, 10:56, 10:58, 10:59. Okay, so just before they had taken it out, and then just after 11, you guys can see what time did we hit highs? What time did we hit high of day so far? Okay, just after 11. So it was like just right after 11 a.m. we had a window. Is that the period that markets, if they wanted to accelerate, they could have? What do you guys think? And acceleration doesn't always mean like massive range, but like even taking this 10, 12 points higher during this period would have been extremely progressive. That would have gotten us back to like 7, 7, 7, 6, 7, 8, so on and so forth. Yeah, and especially considering that this is, okay, so 22 points down. Do you think that's a coincidence? Especially considering what we just looked at, how we had, what we just described, the 22-point differential between here, the 22-point differential between here. Do you think that these are coincidence that we have this? No. Okay, so 22 points being recycled down tells me that they want to avoid what? What are they avoiding? And this is so obvious. What are they trying to avoid here? A zone entry, okay? So they recycled 22 points down. They're trying to avoid zone entry today, which can make this more of a recycled digestive type of afternoon, correct? So I know that odds of expansion are not super high. However, they did test 6.2. Top of the means is usually around 6.4 area, so like 6.4, 6.5 range, like right in here. So what can we determine that they've done so far? Like the most obvious thing. They've stalled the means, okay? I took my first cover when I saw that they kind of started stalling right off 6.1, 6.4. Had they gone just a bit higher, maybe to like 6.6, I would have been more inclined to probably hold, okay? That's why I wanted to wait. I didn't want to cover right at 5.1 or 5.8. I wanted to see how they reacted just after 11 to this area here, okay? Based on where we opened, which is in the channel, which is the most digestive possible area to open, okay? Do we have super high odds of seeing a mass expansion break today based on that to here? Yeah, exactly. Or even to get to a new zone. So it doesn't mean that we can't get to core. Obviously, mid-session is still approaching, but this does make it a little bit difficult. So which areas do you think we'd really, really have to sustain now to even have an odd of retesting 75 or 77, 64, 66? Yeah, or probably at least like between like the 7733 to 7738 area. Like I feel like if they fail the channel at this point and re-enter the zone, we're back at risk of like these neutral ranges being retested, right? And then it kind of just keeps us back to OR. Like it would flatten the day back to where we closed, because we closed and opened around 77, 13, 14, right? That would make it more of like a doji on the day. Does that make sense? Like if they were to bring that range all the way back down. I haven't looked at like what the 50% range is, but I would imagine, oh, why is it doing that? Oh, it's probably close to the zone or channel, sorry. Yeah, so like around 77, 32, 33. So even holding 50% of that range would be a hold above 3.3. Okay. And unfortunately, that's what could make it end up being a little bit like this afternoon, okay? If they end up holding, let's say, here, okay? Like it could end up turning into like this kind of an afternoon, which isn't the worst thing. On a downside scenario, it would be more like if they fail to hold the channel during mid-session and then brought it back to here and then, but okay, not necessarily bearish where they take out lows, they hold neutral, so like maybe between 77, 13, 14, 16, right? But then that just keeps you net flat back to OR, real-time OR. Does that make sense? Like around 3.8, 4.4, 4.8. So you're still stuck in the channel. So those are just some scenarios that I figured would be the case, and a lot of it's going to be relative to obviously time of day. So this next hour and a half that's approaching, and whether or not they actually hold 3.338. I feel like in order to even have any sort of odd of retesting these areas here, they definitely have to hold this channel. Does that make sense, you guys? I didn't want to have like super high hopes because I already knew we opened in the channel today and we closed neutral, so I was like, But that 77.20 hold in real time, this is what helped for real time odds. So at least real time lows is core. So that at least gives me an odd for these areas here. Okay. We still have confliction too. I'm still long XOM for my Friday calls. So there's still a lot of crossover happening this week. Tesla just hit the 348, 346 targets. I don't know who was long Tesla, but these were the targets that I was watching on this one today. I didn't really trade anything other than just that, like outside of ES. I didn't day trade XOM today though. I just have calls that I bought on Monday, which you guys can keep using that too. Gold has been super strong. GDX I mentioned, I think, on Monday as a good one to keep an eye on. So that's another good hedge, really. It kind of just held that 87 to 85 spot very nicely. So gold is doing pretty good. A lot of it is really just relative to what you guys decide you want to trade. These areas here. Okay, it was almost a perfectly clear trade. I don't know if anyone, do you guys want this template on GDX? It's a pretty good one. So these were my trades for today, which I know are not even really related too much to ES, but and there is the annual range that's back at 118, and a lot of it has to do with clearing these green areas here. So 93, 97, 102 are huge on GDX. Okay, that could take it back to highs. These are the big spots on gold, by the way, guys, so I can send this one to you guys too. Maybe I'll put something out again this week on gold. It's 4568 area, okay? This could be the point in time where we get that turnaround, okay? Gold has been helpful though for the index when it's been clearing. So another factor that I wanted to talk about real quick is Nvidia. Nvidia, you guys always know that whenever Nvidia reports earnings, ES is almost always, I've looked at this several times, almost always trading in a zone. Okay, so I am paying very, very, very close attention. So the obvious zones right here are 7688 to 7732 or 7788 to 7832. Obviously, we want to get back to our all-time high zone, like for NVIDIA's report, but a lot of this is going to be relative to where we end up closing today. So, I mean, I don't know. I was going to just kind of monitor a little bit closer to see where we end up closing in on the week, but... Taking it down any more than this boulder, it basically takes us back to annual ranges. Like, I feel like if they take out 6698, even though we have odds of like holding 88 and so on and so forth, we probably could re-trigger our annual ranges like 7644, like this area here, 763228, which isn't the worst case because we do have a lot of time to kill because there's still 4.5 months left on the year. But I mean, a lot of that just depends. Like, think of it this way: if they end up taking it down back to those annual ranges, okay, like especially if you look at it from like this kind of a scenario, right? Because like we're working with roughly this many points, okay, 98, whatever that range was. If they end up doing something like this, okay, then like, and split that up into like increments. So you could do like 466, 466, 466. Okay, do you see what I'm saying? Because that's roughly the kind of range that we're working with. If they end up doing something like that, then that's kind of like taking it back halfway. Does that make sense? Like this range in here. So if they want to do something like that, it'll decrease the odds of getting like an extension of that same amount of points on the upside. So let's say like this. Do you see what I mean? This is the most like dumbed down way of looking at this. It's kind of relative to like, okay, if they want to recycle range back down to these areas in here, we'll just say like roughly 7,600, okay, to 70 or to 8K, okay, basically between here or here, okay, then it takes away some of the odds of getting like that extension of that much range up there, or the overall wider extension like up to here, Okay, so lower odds of getting this kind of range on the year, and probably could limit it to like the 8K range on the year instead. Does that make sense? If they fully decide to recycle the full 460 points back down, like to here, let's say, which I don't think they would do that, but let's say they did something like that, then we're probably a little bit constrained or limited for how much range we have. So they're kind of keeping it like not halfway, they're keeping it like a fourth of the way in between. Because if you take 466 and divide it by even 4 or 3, like roughly like 116 points, I think is what it is. And I haven't really measured this. You could just go with like our 128, 130, because we normally use those ratios anyway, like 128, 132. Oh yeah, see, that's so close. That's 133 points. Okay. So they're working with like a quarter of the ratios right now. If they were working with a third of the ratios, it's closer to like 155 points. So let's zoom in. Let's see. 155 points would give us, that's probably like close to the zone. Or like right down to core. Okay? So there's a lot of support in these ranges in here. Whereas this is closer to a fourth of the range. From open to close, they're holding like right in between a fourth of that range. Because 466 or 460 divided by 4 is 115. Okay, so they're trying to hold basically 25% of that range to leave the remaining 25% of upside, which is another 466 points. So they're kind of tackling a pretty interesting area here. I would say it's probably closer to like the 33% mark. Because 466, like 33% is like close to 154 points, I think, roughly. Which is going to be very close to like the bottom of that zone. Or on upside, it would be the equivalent of like getting back to like 7852 or something. But if we're looking at it from like the actual calculated areas, like 7821, 22, it's kind of closer to here, whereas 115 points is pretty close to where they are stalling. Okay. So lows, it's not like the worst thing if they took it a bit lower. We just have to be very mindful about like how low though, okay? What kind of ratio would it be? Think about it from like a percent perspective and then a time perspective, right? So like how much time we have left on the year. So we're about to close our month 8, so we're gonna have 4 months left, right? So you have to think about range and the number of days. So far we're holding pretty good, guys, off my 3/8 support. We'll see if they, sorry, I know this is kind of a boring session, but we'll see if they end up tackling this back. And sorry I haven't been able to stream as much, but anyway, I know this is not the most interesting trading session right now, but I hope this is at least helpful for you guys to understand like just overall concept of range, maybe look at other areas of interest. I really liked healthcare and consumer defensive names this week, and so far those have played out pretty good. Some of them are kind of coming like right off the lows. XLV names had a pretty strong move. That was mainly due to mRNA though today. That's crazy that this thing just kind of gapped right back over those areas that we had in the past. And then crude's just stalling off that 85 overhead. You guys want to mark it down? 85.42 is pretty huge on CL. Which is interesting because ES is hitting the like major support here in 7751 wall, whereas CL is hitting 85.41. Like you see how they're still clashing, like crude and index. I think the most interesting thing now though is gold, and we did mention that gold could take a few months, especially when we were looking at like the wider time frames, like the 7 month, okay, because this flipped August 3rd, so like the new period starting this month. And then the wider time frames that we looked at, I think, were the 10 month, 9 month, 1, 2, 3. This is still the third bar. Okay, that doesn't flip till October 1st, so there was that period that they could turn it back around. This flips November, and then this one is just continuational till end of year. But the bigger ones that stood out to me were the 3 month that could engulf, okay, or at the very least negate, and then it was the 4 month, 5 month that could engulf this range, and they could do it. I don't know if this could do it by September 1st, but engulfing setups on gold, okay, but they're worth watching, I think. Like especially the 5 month, 6 month is flagging again. This doesn't flip until next year, but 4 month, 5 month were the most interesting to me. Mainly the 5, just because 1, 2, 3, 4, okay, and you can see some exhaustion, but then it stayed green. 5, and this runs until November. It gives it a little bit more time than that 4 month does. So these could be some outside structures. And I think the most important would be is, okay, if they can get this to close, doesn't necessarily have to engulf obviously by September, but like I would say if it can at least get back over here, okay, this range in here by the end of the month, this has very, very good odds of extending, okay, because this flips on September 1st obviously, but okay, and it makes sense because that's our big spot on gold anyway, so clearing these areas puts you at a pretty good probability of engulfing back these ranges here. I haven't measured it, but if you, yeah, I figured that's going to happen because crude was clearing and they've been clashing lately, so with 5-1 and in that area here. But watch this on gold, because I didn't really measure the full range, but I figured these are probably very, very similar. Okay, do you see what I mean? Like once it clears this range in here, it's probably very close to like where this, yeah, it is, like that's insanely close. Do you see like how they're almost at par with like where this thing had initially dropped from highs off lows to the clearing area near like our 4, 5, 6, 8, 8, 4 spot, okay, and then this mass structure here. So these are very, very, very calculated spots, I would say, okay. And this is kind of the median in between, which is I didn't measure, but it's probably like half the range. This is probably close to like 300 something points. So I think this is worth paying very close attention to, because obviously 5K is a very obvious wall, but it's mainly these outside bars that could pan out, and it's what keeps it durational, especially on like a 5-month. Okay, 1, 2, 3, 4, 5, 6. Okay, 7. Maybe they don't see any exhaustion until next year or something, and then it kind of just keeps the theory that I had where we have 1, 2, 3, 4. A lot of these don't even flip till October, November. Okay, 1, 2, 3, 4. So like for like those continuation periods, 1, 2, 3, 4, December. And we did mention that this could be the period that starts to exhaust early, especially off these major spots here. I still can't believe I lost my primary gold chart, but, and it's funny because these were the big areas of overhead that we had anyway in the past. So getting back above 5, 4, 6, 8, or 4, 5, 6, 8, sorry. Something to keep a very close eye on. You can even just buy further dated for end of month is probably okay, but if you really want to try taking advantage of gold in case it does get that full break, I would look for maybe something even as far dated as like November 1st or like the end of October or something like that, because there's a lot of confluence with the 5-month that flips over on November 2nd, and then there's also the 10-month that flips over on November 1st, okay? So November 1st or November 2nd, sorry. So you can kind of just watch flips. Nice work on that long boulder. I had covered half my position here and I left the other half. The big idea for me was holding off of 3-8. So this was a really good hold here off 3-8, I would say. And especially ahead of mid-session. And we're looking for a 7758 to 7764 retest by mid-session is what we're looking for. This is the only way that we can keep odds in play today for avoiding channel digestion or coming back to this range in here. So, okay, with the 7738 hold, do you guys agree that we have an odd now for retesting 7764 to 7766 during mid-session, so between this period here? Yes, okay, I would say so. As long as they can keep things constructive. This is pretty closely aligned with high of day. That flips at 12:15, so, and this was stuck inside. I just figured it's kind of an interesting time frame to watch, along with some of these wider ones like the 146. This doesn't flip till 128, so I am watching. They're just after and just before mid-session, okay? So this was the earliest period that I had for a retest here. Okay? So we can watch around the, I would say 12:12, 12:14, 12:13, this period here. This is the closest aligned to our highs. This was the earliest period. I didn't know if the odds were super high. A lot of it was based on whether or not we actually hold off 3-8, okay? So sustainment here gives odds of retesting 7758 as early as this period here, 12:12 to 12:15. And that's what could keep range durational through the remainder of our mid-session. The second flip we had is 1:28 p.m. 12:15 p.m. These were my afternoon flips. There are no flips with that existing high up day. There's no time frames that correlate to this, so it's a lot of it's manual. Which what we could do is even just watch between like 1:15 to here, like midpoints between highs is probably approaching pretty soon here. The median of that range is close to like 67 minutes, so it would make sense that they'd probably want to start breaking around this point here. Do you see that? Like this stick. Okay, that's the exact midpoint of highs in mid-session, whereas off like the actual real-time session, it's close to like 150 minutes. That's probably going to be closer to here, around that 128, 130, 129. Whereas your furthest extension is going to be closer to like 180 minutes or so. And that's probably right before 2 or just after 2, like around 1:59, 2 p.m., 2:01, this period here. Okay. So 128's a flip, but we also have some calculated odds around 130, 129 that we're going to watch for. 13 points. These areas are calculated annual ranges, like 5.8, 5.9, so yeah, I would imagine so. Because even from here to here, I think, if I'm not mistaken, like off of 5.8 to here, this is probably close to our 22 point ratio that we were looking at earlier. I think it's just over 5.8. It's like closer to like 5.9, this area here. Okay, so 5.975 you could definitely use as overhead. Okay, off that actual hold around 3.9, it's closer to like 6.175. 7.5975, 7.6175 is overhead. So those are the calculated overheads, and these would be the calculated points in time. Twelve, 13 points off open 2 is a good way of looking at it from what Boulder was saying, because usually the minimal increments you have to break are 12 to 13 points, so that's a very, very valid point to get that kind of progressive PA. And then your next increment above 13 points is always 17, so that would be kind of closely aligned to here, and then obviously 22. So the thing that we haven't done yet is, okay, we've broken 22 points off support, but we haven't broken 22 points off open yet. So that's what makes 7.6550 a really strong overhead. Does that make sense? Like, we haven't broken that range yet. Okay. So 7.76550. I know in the chat I had said 6.6, but and 6.4, but that's the exact range off open. Okay. This was the earliest odds, so far they're stalling here. Odds seemed a lot higher, closer to like the the 1 p.m. period, like closer to here. This is why I figured they could start recycling. But we'll see. Maybe they end up holding off and then push through our 12:30 to 12:48 period. Okay, I think I'm going to end the stream now, guys. I'll probably be back in like the next hour or so. Just kind of watch to see how they end up closing. That's a really good recovery off our flip stick at 12:15. Well, they're trying. 12:15 is our calculated flip here too. So not quite 5.8, but they were able to trigger 7757.25. And I don't know if you guys saw that 15-second turnaround that they did there. Do you guys see that? Look at that 30 seconds. That's pretty insane. They did like a hold off 5.5 and tried their best to push. That could imply some late volatility, I would imagine, because of the turnaround time. So, meaning they could just try breaking like a minute later. I would watch like the last 10 seconds of this closing stick right here to see if they trigger 5.8. So like around here. Here. Do you see that? This window here. Look at that gap. That's hilarious. 77.58 triggered a minute late. They're really trying to put back on that momentum after turning things back around the final 15 seconds of that 12:15 stick. 775825 triggered. 775950 is a bigger overhead here, and that 6150 to 75 area. But I think even if they can get it back over 5.8, that's still progressive. Specifically at this time of day, so 12:15 to 12:16. I would say that condition was met, but with some slight volatility here, okay? Conditions by, these were the earliest odds for a 5.8 retest. I would say for a high of day retest, I could be wrong, but I figured it was closer to this window here. If they can retest highs closer to this time of day, then we have pretty decent odds of clearing 6.6. But if they end up stalling and digesting the means during this period in the day, then we're probably a little bit more constrained to like these areas here, like 6.9, 7.1, or even recycling the means a little bit. So far though, this I would say is a pretty progressive move. Like that's a solid 7738 hold and 7758 retest at 12.15. We'll just have to see if they can start sustaining above the channel. So we definitely want to avoid the channel now though. Like if we want to see any progression, do you think we want to come back to the channel before testing 6175 or 6.5? What do you guys think? Probably not. So we want to avoid this area here, okay? To at least keep some odds in play for retesting these ranges here. My targets I think can remain as is since we had a 3.8 hold and breaks of 5.8 on time here. Let's watch the 12:20 to 21 period just because they have some odds of retesting 6.1. 7.5? 5.9. 7.5 is more calculated though. That was that 22-point range I'm pretty sure off. Or the 17-point range, sorry, off that low. And off 3.8. So 128, 130, that's a pretty important period along with that just before, just after 2 p.m. Okay? Are you guys okay with me ending the stream just for a bit? I'll be back. I don't really want to end it during mid-session, but I have to do something. I still have my long position off the 77.24 to 26 area. I took half off when we stalled here just after 11. That was my first major flip that I had. And I'm holding because we held 3.8. Okay, had we not held 3.8 and broke beneath 3.2, 3.3, I would have probably just fully covered because odds would have been a bit more for choppy price action at that point in the day, especially ahead of mid-session. So far so good. We'll see if market can at least keep some of our odds in play. Hopefully they don't end up turning this into a recycled afternoon because of that channel open. So we still opened above 7738 though, so that's still good. But it's just what could keep range a little bit limited. I'm not sure if we'll get zone entries anymore today. I feel like that's off the table after they recycled here after 11, but I feel like there's still some odds for our 77, 71 target. We'll see. Okay, I'll be right back.